Game of Thrones NFT's most recent attempt to entice fans with cryptocurrency collectibles. Welcome to CryptoLink channel. If you love getting news and updates about cryptocurrency, join our community by subscribing to our channel. You can tap the bell icon to never miss our new videos. If you enjoy our channel, kindly like and share it with your friends. November 3, 2022. The Blocks tweeted. In case you missed it, Game of Thrones NFT's latest effort to tempt fans with crypto collectibles. Behind another legendary brand, Game of Thrones, the Hollywood giant Warner Bros. Discovery is going even further into the realm of cryptocurrency. The media company, which owns the on-demand service HBO Max and the premium cable network HBO, revealed it will be launching a set of NFT avatars entitled Game of Thrones, Build Your Realm. The action is the most recent in a flurry of other strategies that are designed to entice enormous fandoms used to willing to fork over cash for the most recent round of branded goods. The NFL as well as other sports leagues either have produced or are planning to sell NFT memorabilia, however NBA Top Shot has been the pioneer. Warner Bros. Discovery has already announced projects using well-known brands such as the DC Comics, Lord of the Rings, and Looney Tunes, so it is not unfamiliar with exploring with NFTs. Chief of NFT Commercial Development at Warner Bros., Josh Hackbarth, announced in a statement about the Game of Thrones collection and said that, "As always, we want to provide fans additional opportunities to engage with the characters and stories they love. In December, the initial launch will start." To oversee the NFT launch, Warner Bros. Discovery collaborated with DAS3D, the company that developed non-fungible tokens, and the fan-focused virtual asset platform Nifty. According to a statement from Nifty CEO and co-founder Jeff Marsilio, the NFT series would enable fans of the brand to engage in ways they have never experienced before. November 5, 2022. A tweet from Cointelegraph stated, "What's behind the gains? Check out why BTC and crypto are pumping today. Bitcoin has surged to new 7-week peaks, and optimism on the macroeconomic outlook is regaining momentum. Bitcoin USD has risen to its highest levels since September 13 thanks to the most decisive charge of $21,000, according to data from Cointelegraph Markets Pro and TradingView. Bitcoin recovered from lost time following the volatility brought on by the U.S. Federal Reserve's increase in interest rates, and a few days later, it left bears and shorts in the dust. Although opinions on the Fed's decision are divided, there is still an air of doom among cryptocurrency experts, with forecasts of $30,000 resurfacing in November continuing. Some still predict that 2022 will see a bear market similar to that of 2018, therefore the outlook for the remainder of Q4 is unclear. Nevertheless, there is optimism that this bearish movement will terminate permanently before the start of the next year. Data from CoinMarketCap shows that the total value of the crypto industry has now surpassed $1 trillion once more. The strength of the cryptocurrency industry in the present is influenced by three main factors, according to Cointelegraph. The Fed could reconsider raising interest rates. The U.S. Federal Reserve was listed top in Cointelegraph's article on the factors that contributed to the crypto market's recent losses. Risk assets would suffer the worst-case scenario if policy remained unchanged and kept the U.S. currency strong and rates rising for the coming years. At the same time, speculation is growing about the probability of rate increases as the Fed runs out of options. After the 75 basis point increase in November, there is speculation that the policy may start to reverse itself, with lesser increases in consecutive months before a complete change in direction in 2023. Markets that have been subjected to a year of QT or quantitative tightening, as a result, alert to any indication that the Fed is getting ready to temper its hawkish approach. According to CME Group's FedWatch tool, the Federal Open Market Committee, or FOMC, meeting in December is presently anticipated to result in a 50 basis point increase rather than a 75 basis point increase. The announcement of unemployment statistics on November 4 boosted bulls' confidence. Arriving in higher than anticipated, the signal may be that the rate increases are producing the desired impact and that a pivot may thus occur sooner than later. Volatility in Bitcoin breaks all-time lows. The Bitcoin USD has been too calm for a long enough period of time, according to data analysis from Cointelegraph Markets Pro and TradingView. The Bollinger Band's instability indicator, that has been clamoring for a breakthrough for weeks and hasn't been this close together in history of Bitcoin, is a particularly clear example of this. The volatility of Bitcoin even dropped below that of certain significant fiat currencies in the previous month, making Bitcoin appear more to be a stablecoin than a risky investment. Analysts have long predicted that the trend will see a severe shift, and the cryptocurrency markets did not disappoint. The Bitcoin Historical Volatility Index, or BVOL, which has lately achieved multi-year lows seen only a few times, indicates that Bitcoin still has a way to go before giving up this tendency. Co-founder of the cryptocurrency research company Reflexivity Research, William Clementi, said that it's kind of ironic how volatility has been compressed and how market players have conditioned themselves to perceive even a 3% movement as a 15 to 20% movement. Dollar anticipates a new chapter. The US dollar has been on a parabolic upswing since the beginning of 2022, and it is just recently starting to show symptoms of weakening. The US dollar index, or DXY, just reached its highest marks since 2002. And the momentum might pick up again and push it considerably higher, damaging both major currencies and risk assets. However, the DXY is currently under pressure, and its decline corresponded with a return to normalcy for Bitcoin and other cryptocurrencies. This highlights a problem that Bitcoin bulls are eager to resolve: a continued strong connection with conventional markets and an inverse association with the value of the dollar. This Monday, trading company Barchart reported that Bitcoin and gold now have a correlation of around 0.50, up from 0 in mid-August. Charles Edwards, a fellow analyst and the founder of the cryptocurrency asset manager Capriol, pointed out that rising gold correlation frequently coincides with Bitcoin macro price bottoms. The Wolf of Wall Street's analyst and podcast host, Scott Melker, also acknowledged that the correlation between Nasdaq and Bitcoin is developing. He stated that futures on Nasdaq are declining. Bitcoin is rising. Over the last few weeks, the brief association between the two has vanished. I'll take it. That's it for our today's video. So, what can you say about the news? Let us know about it in the comments section down below. Thanks for tuning in to CryptoLink. We are always excited to provide you with news and updates about cryptocurrency, and if you like this video, please click the like button. See you on the next one.